So, hello everyone. I hope you all are doing well. In this lecture, we will learn how to finally start trading on any exchange. Basically, there are many types of exchanges, and it usually depends on your location that which exchange you use. But I would highly recommend you to use this platform, which is Binance, because I've been using it since a long time, and there has been no issues. And if there has been an issue, it has been solved, but you can look at other exchanges as well. But the most important part and the most important thing is to look at whether or not what fees is being basically charged as a trading fee. Because there are some exchanges like Coinbase which usually has very high trading fees. So just double check it before creating an account. So creating an account is no big deal. What you would have to do is you have to, click on the register, and then you will have to create an account. And what it will do is it will first verify your email address, and then it will say to you to add your CNIC or national identity card or other passport, which can verify your actual identity. Well, why is that necessary? And before moving on, I would like you to indicate that if that your national identity card or your passport should be in English language, so that that software could read and verify you, and it could be easily verified, and your photo and your photograph on that should be clearly visible. So after it has been done, you can then start trading. And basically, why is that important that you are giving your national identity card? Well, according to the law and according to the rule, any firm who is basically acting as a broker, they should have all the details about its client. So basically, it is necessary in order to deal with it. So many exchanges might not require it, but be aware of those exchanges because this is the law and everyone should follow it. So after you have done that, then the next important thing is to buy the crypto. So there are actually three options, and the first two are important, and the third one you can use as well. So the first one, which is basically to use your credit or debit card, you can simply select here your, for example, if you are living in Australia, you can select Australian dollar. If you are living in United States, it was selected previously, and you can search here as well. You can select USDT, and then the next option it will ask you is whether what you need to buy. So here you can buy any of the token directly, or you can buy a stable coin which is either USDT or BUSDT, which is Binance USD, or USDC. So any other coin like BUSD, you can buy that as well. You can buy USDT. So you can buy any stable coin. And once we'll click here, they will say you the amount for which. So, for example, if you're buying for $1,000, and so it will say that you will get 994 USDT. And there has been some fees in the meanwhile. And then uh, the account is not logging here, but when your account will be logged in, it will ask you for other details. And so there is another way from which you can buy at this platform, and that is peer to peer or P2P. If you don't have debit card, or if your country doesn't allow you to buy with your debit card, but it is completely legal in your country to trade in cryptocurrency, then what you can do is you can click. If you can see here, it is P2P trading. So you can just click here, and it will basically give you the option to buy it from any of the local vendor. Well, for example, if I select Australian dollar, so let it refresh. Yep. So basically, you can easily buy it from here. Basically, these are the merchants who are selling it, but the rates usually depends on the market situation. For example, if there has been a dump, so usually the demand for the USDT goes up, so they might charge you higher. But what I was saying is that you should buy from those traders who have at least completed 100 trades, for example, like this, and it is really good that they have high completion rate. And even if you want more security, what you can do is you can only buy and sell from those who are verified, like this man as well, and like this man as well. So this is how you can actually buy from another way. You can also buy BTC directly. You can also buy DAI, which is another stable coin. You can also buy Ethereum. You can also buy BNB. So there is a lot of options. And in order to sell, I would recommend you to sell here because the rates are usually good at selling. So you could easily sell here. And again, the same thing is to follow, is to sell to anyone who has this stick or who has a high, very high completion rate above 95%. So this would mean that the person is really, really honest with his job and you will face no problem. And even if you face the problem, you will have to report. So here, as you see, this is basically the support section. And here you can say ask him anything, and even if your verification has failed, you can ask him that as well. And so this can there can be anything. If you need any help, you can just click here at the message icon and you'll get support. What I recommend you is that before buying and selling, you should try buying a minimum one. For example, if you are living in US, what you should do is you should buy a limited amount of USD. For example, you can buy only $20 of USD and you can see that how it works. And I would recommend you to use the mobile version of Binance during this buying and selling if you are doing it, even if you're doing it with the credit card. And I would really recommend if you're doing it with the if you're doing it with the P2P method, because the merchant usually asks for a screenshot and so that you can send him screenshot very easily. And so what I was telling you guys was that you should first to uh, try to get in $20, like buy USDT for $20 and then cash that out and see how the system works and see that you were able to take out the amount that you inserted in it. So this is one of the tips which I would give you. Since and After you have bought it, then you should go to trade and then you should click to classic. So this window would pop up, and here at the right side you can type any coin. For example, um, if you want, for example, Ethereum USDT, you can type that, or if you want any other coin, you can type that as well right here. And I've already shown you that it already has a chart, and so you can use this chart to set a 4 EMA, since the TradingView free chart doesn't allow you to set much. Or you can open TradingView chart in multiple windows. That could also work. Now coming back here, imagine if you are buying USDT, if you are buying BTC from the USDT, sorry. And so there are different types, different sections here. And so what you need to remember is that if you are a beginner, you should only deal in spot and you should not touch this cross 3x and isolated 10x because it is quite risky. It is quite risky, and if you will get liquidated, you will lose all your funds. But in a spot trade, you just have to hold if you are in loss, because since you haven't sold anything, you are not in loss. Your assets are just appreciated, so when the prices are up, you can easily sell in profit. So there are three types of windows right here. So the limit is basically, for example, the current price of BTC Bitcoin is 33,437 or 435, around that. So if you see that, if you say that BTC will go down, and this is how you will automate your whole trading. If you say that, I think according to my analysis, that BTC will go down to 32,000. So what you will do right here is that you will enter this amount and be sure that limit is set, and you will enter 32,000. And once this price is set, now you will range. Well, this is not moving since my account is not logged in, but once it is logged in, it will show you that how much of how much percentage of your funds do you want to buy BTC? Or for example, if you want to buy one BTC, you just need to type your one. But if you have 100 for example 1000 USDT, and you just want to buy 50 of them, 50 USDT worth BTC, so you should so there's another window right here where you could write USDT, and it will automatically convert it into BTC. So once that is done, you should there will be another tab which will show you buy now. And once you will click that, your order will be placed, and you can see that order right here where it is open orders. And once that order is being filled, suppose you were sleeping and that BTC price touched 32,000 and bounced from there. So your order will be filled, and you can see that in the order history and in the trade history as well. Similarly, if you have bought at 32,000 and now you want to sell at 40,000, you could just do is that you will write BTC 40,000 and the amount of BTC. So the total BTC, how much you want to sell at 40,000. If you want to sell 20%, you will adjust it from this. And for example, if you want to sell all of your BTC, so you'll just write here and then select sell now. So again, your open order will be shown to you right here. And once that order will be filled, you can see trade history. Also, another important thing, that if you have supposedly you have selected 32,000 buying price, and then again you do your technical analysis, and you came to the conclusion that it might also that it might just came it might the BTC price might just come to 32,500. So what you can do right now is to cancel. You can cancel your order without any fees charges. There will be an option right here, and it would be quite easy. And you can cancel your order, and you can place another order. Similarly, you can cancel your sell order as well. And all the cancel orders in the order history, you can see all those orders who have been filled as well as all those who have been cancelled. So this is how you will bring automation, since once you have set your sell and buy target, it will automatically do trading for you once it touches that prices. So now moving on, this market here is basically you don't use think that right now, for example, at 33,300, it is the best price to buy. So at this market price you want to buy. So what this is basically at the current price it will buy BTC for you. So this is quite simple. So you'll select again the quantity right here, and you will place sell now, and it will immediately be filled, and you it will not come into open order, it will directly go into the trade history. And similarly, if you want to sell BTC, what you will do is at the market price. For example, if the market price currently is 40,000, what you can do is that you will set its price, and it will just fill it automatically for you. So basically, the third kind of order which we can place here is called stop limit. Well, what the stop limit is? Stop limit is basically when you have to protect your downside or you have to minimize your loss. For example, if you have if you have bought the Bitcoin at, for example, the current price of 33,400. Now, if you are expecting the price to go up, but the price suddenly goes down, then in order to make, so you know that this is the major support. And if this breaks the support, for example, the 28,000 support has been broken, then it might go below it as well. So once it touches the 28,000 support, it will activate one of your order, and then you can sell it with the minimum loss. So basically, it means that instead of bearing a much higher loss of, for example, 25%, you can bear the loss of 11%, which is the less loss. Well, you might be wondering that how we might use in the spot trading. Well, this is mainly used for scalping, and this is mainly used for future trading, which I have not recommended you guys if you are a newbie. So how to place this order is, while you are selling, you can say that at 28,000 this order will be activated. And if the breakdown is confirmed, you can say that at 27,500 it will sell all your holdings. So this is how sell at selling the stop limit works. However, at buying, the stop limit works in a fashion that, for example, if you have bought it from here at 33,000, uh, let's say if let's say if you have to buy, let's wait, yeah, let's say if if you have to the buy the order, you have to place a buy order from here. So once there's a breakout being confirmed with this heavy volume and with these kinds of candles, you have to buy BTC, and you have to sell it at this point. So basically you have to activate your order if this price range is being broken. So this is how you'll use the stop limit to buy. So let's suppose if this is around 33,358. So what we will do is we will place that if 33,358 is being touched, then this order will be activated. And if it goes beyond, let's say 33,800, for example, then the BTC will be bought. So this is how stop limit can be used to buy and sell BTC. So the other advanced version of the stop limit is basically OCO. OCO basically means one cancels the other. So while you are protecting your downside, you can also place order for upside. For example, if you have bought the BTC right from here at the current price and you expect it to go all the way right here till 36,000, but you also need to protect your downside. So what you can do in OCO is basically you can set the price at 36,000. I want to sell at 36,000, but if before that it touches 28,000, you can activate this order, and if the breakdown is confirmed, you can sell all my BTC or the specific amount of BTC at 27,500. This is how you will be protecting both your sides. However, there is another important use case of this OCO, which is that, for example, if you have, again, let's suppose you have bought it from the current price at 33,355, and now the BTC then rose all the way up to, let's say, 36,500. Now you know that this is your resistance, but you also know that this there might be a breakout or it might fell. So basically, what how you can set the OCO for this is basically that if you expect it to break out and go, let's say, if you expect it to break out and go, let's say, on 38,000. So basically here in the previous example, there is at one price there's a loss, and at one price there's a take profit, or the price at which you will generate your profit. But what I'm trying to explain you right now is that how you can generate both orders, and both orders will give you profit. So for example, if you have bought it at this current market rate, which I have already told you at 3,335 or 3,700, and then the BTC went all the way up to 36,500. Now you know that there might be a breakout at this point. So if there is you want to sell all your BTC at the higher price range, if there's a breakout, let's say suppose at 38,500 right here. So, but you also know that this is the resistance. So the price might come down. So what you can do is that you can say that my selling price is 38,500 if this breaks out. However, if let's suppose that current market price, for this order to be placed, the current market price must be somewhere nearby. So you will say that, for example, if this price comes on let's say, if this price comes on to this support of 32,726, 32,726, and if there's a confirmation, that there's a breakout, then sell. Yeah, right at this 30, sorry, if the price came here at 35,589, if the price came here at 35,589, and you say that if there is a breakdown from here, then you can sell all or limited number at 34,500. So as you can see here, as we have bought at 33,500 or 700. So now here all your targets are being profit targets. So basically here, if the resistance is from resistance, there's no breakout. So there's a breakdown instead. Let's suppose, wait a minute, I'll bring this chart back here. So basically I was trying to say that you can also set to take profit targets in these types of condition. But for that to happen, the price should be somewhere around 34, 35, or 36, and somewhere near it. Basically what you mean by this is that if it touches this resistance, so there can be a break up, there can be a breakout, or there can be a breakdown. So if there is a breakout, then you can sell quantity at 38,500. But if there is a breakdown, so if there's a breakout, you can sell it at this resistance. But if there's a breakdown, you can sell it at this point or somewhere near it. So this is how you can set two take profit targets and avoid, like for example, what is the usefulness is that, so let's suppose if it touches this point and it start coming down, and now it is below your buying price, so now you are in loss. So this is basically done to get the maximum, to get a minimum profit, and uh, to basically get the minimum of profit and avoid selling in any type of loss or waiting for the price to again rise. So this is how OCO works. OCO can be understood that it is the advanced version of the stop limit. So basically, I hope you were able to understand this all. And so you can first start by checking out limit and market price by setting orders for limit and market price only. And I do I do recommend again to you guys that only go for spot trading if you are a newbie, and make all the calculations before taking any trade. And I would recommend you to practice before taking any physical trade. I hope this whole lecture series was helpful for you, and I was able to create some kind of meaning, and so I was able to impact your lives in some way. If that is so, I would really appreciate to you that if you also feel passionate about teaching anyone, you can also teach anyone. And I wish you best of luck for your trading journey. So that's all from my side. See you soon.